Hello and welcome to another update video about Bitcoin. In this video, I'd like to show a focus only here on the lower level wave count. If you're interested to see the the time frame since June, check out my previous video. But really, I think what is relevant is here only the lower time frame at the moment, because in the short term, in both the bullish and the bearish scenario, the lower time frame is important. We can currently see that not everything is following Bitcoin. Yeah, what many people still think is happening, that many coins only move with Bitcoin. This is not the case. I think we have so much evidence these days that this claim is just not justified anymore. But I say that throughout anyway. The key is here to see that yes, there are of course certain correlations, but take a look at Ethereum, which is normally highly correlated with Bitcoin. It just moves on its own. Yeah, it's making higher highs, it's making higher lows. Bitcoin, in contrast, only had a fake out. Yeah, so how would it be possible for Ethereum to, as shown here, to move higher here overnight? Yeah, while Bitcoin is just coming down to the same level. Bitcoin made a huge fake out instead and didn't basically move. Ethereum instead moved up 6%. So again, some more evidence that no, coins are not moving together. For Ethereum, we mainly expected a move up. For Bitcoin, as I said in the last videos, we actually expect a move down. And that latest move here, yes, it shakes up the wave count a little bit, but it doesn't really change it a lot. And it was only a fake out basically, with even an engulfing red candle following. So overall, all we have to do is to shift the wave 2 a little bit. We did not move above the wave E high at 20,450, which would have invalidated this imminent wave count. So it just means that we had a bit of a fake out to the upside in a wave 2 retracement. Originally, we could assume that the wave 2 might have finished here, but we never had the breakout pattern or confirmation. Therefore, you always need to be open to different possibilities. So now, really, unless we substantially break above that wave E high and better even the wave A at 20,570, we have to focus on lower. Here in the previous videos, I mentioned to you as a key breakout point as well that will give us a good hint that the overall move might be going up, would actually be a breakout above the wave 4 high. Now you can see how relevant, again, this technical level was. No, it wasn't the news that pushed the price down from here. It was the technical level, that wave 4 high. You can see that we reached it with the accuracy of, I don't know, $1, $2, yeah, which I think is pretty good here. The 20,162 level didn't break it, not substantially. So this was a very valid level that was not broken. Therefore, the downside pressure is still very much there. And the fake out of a triangle like this is also very bearish. Yeah, fake out and then coming down again. Because overall you can see this as a trend continuation pattern, just a sideways range. You might consider that a bearish pennant. Overall, here we would expect another low. Now again, as I said in the previous videos, good for the bullish case would be that we're holding the 18.9K and can recover from there. In the bullish scenario, that would mean from here we can really substantially go up and would even break the 25K level. Again, it seems unlikely now, I know, but it always seems unlikely when you are at the bottom that prices will recover. Always remember that bear markets end at some point. Now, I'm not suggesting it is necessarily ending yet, but we could see some kind of a more extensive bear market rally. This would all be part of the bullish scenario, that we're not going to go below 18.9K, at least not imminently. So we might see that additional low. Ideally, we hold above the 18.9K level. That would protect the imminent bullish scenario. Even if we drop below that, there is still another bullish case left. And of course, we could theoretically still turn around above the 17.6K level, so without making another lower low. And you can still call it we are in the bullish scenario, basically because we're not making a lower low. But in the short term, and I think I made that clear, I would expect another low. It doesn't need it. That is also important to understand. It doesn't need another low because we have basically fulfilled all the requirements of this move down. Yeah, we fulfilled all the minimum expectations of this move down. It doesn't need to go lower. And these are always the areas that are difficult to analyze, because if a wave has fulfilled the minimum of a move down, for example, or of a move, of course it could extend further, but this is the point where you need to be on high alert for a reversal. So here, for example, yeah, very clearly, as we were here in this area around 21.8k, we had this reversal area on the chart. I told you very clearly, with a high likelihood, we're going to see a move down, which in the end also happened. Yeah, reason for that is because here we could only count 3 waves down. So it had not yet fulfilled the requirements of this decline. Now we can count 5 waves down, and this means it could be finished. Yeah, one, no, not like that. Here, 1, 2, 3, 4, 5. It doesn't need to go lower, but I could add another 1, 2, 1, 2 setup here, and then we have another move down. Now I don't know if that is needed, but I can tell you that the wave pattern that we see here would suggest it now, because it is just a sideways mess, and it suggests that we will go down lower. It's a trend continuation pattern, and the wave count would suggest that as well. So be on high alert. Unless we can substantially break above the 20,160 level, yeah, or whatever it was, 162, that wave 4 high there, yeah, that would be a very, very good indication that we're not gonna come down. And then the move above the wave E will give additional evidence, 20,450, and then the wave A at 20,570. And then we will be able to see a recovery, at least into the region between 22 and 23k. We could then still be in the bearish wave pattern overall. It will not dismiss the bearish case, absolutely not, but it will again give a bit more comfort and possibly help to protect the bullish case, at least imminently. Yeah. So you might remember that I do expect a recovery, but before that we will probably see that additional dip, and then we would expect, at the very least, the recovery in a corrective pattern. That would be the minimum that we expect to see. So here you can see it outlined on the bearish chart, that if this was just an impulsive wave down that will eventually lead to lower lows, that we will then see, after possibly an extension of the wave 1, that we will then see a recovery to 22 to 23k. And in the bullish case, yeah, also after possibly an extension to the downside, as I said, but obviously in this scenario, in the bullish case, we would need to hold eventually above 17.6k, better above 18.9k. Here we would expect a bullish recovery, yeah, in a wave 3. Which of these will play out, we don't know, because in the very short term, both wave counts are very similar. So we will see that as we go higher, and then look at the price structure, and I will be able to give you my best assessment of if it is an impulse or just a correction. Okay, and that's my update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then check out the channel membership. Thanks a lot for watching. Bye bye.